The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the week of trade on Halloween Friday, pretty quiet through much of the morning, but we did find a little more volatility across the trade into the close, with some of that just the end of the month and some position squaring, other headlines maybe hitting the trade. Let's dive in and talk about some things. It has been a week in the market status for sure. Joining us now, Scott Varlick with Koima Varlick out of Sioux Center, Iowa. Scott, good to have you back with us here on Market Talk. And man, oh man, what a week it has been in the markets, on the cattle side and the grain side. It really everywhere. It's been a week, hasn't it, Scott?
Yeah, and thanks for having me, Jesse. But it's spooky. There's your Halloween word. Absolutely, the markets are unhooked wild right now.
Let's talk cattle. You know, things look pretty quiet on Friday, and I was thinking, all right, we were going to head into the weekend on a somewhat positive note, considering all the volatility it's been there. But finding some losses late in the session, you know, there's so many things I'm sure we could say about what's been happening here in cattle, but I know this past week plus has not been for the faint of heart here across the trade.
Yes, very much so. And it's a $60 break in feeders and 25 in fats, and happened with our, several limit down days and then a limit up day. So, I mean, the volatility like we've never seen before. And when you have a market at record highs, yep, that's how they correct, stairs up and the elevator down, and several reasons why, but maybe it just needed that excuse to push the boulder over the edge for a correction, because everything was, at some very high levels. So today, finishing the day quite a bit weaker. I mean, I thought we were probably okay. Maybe we turn the corner. You start to turn to some fundamentals, only to get slapped again by another downturn in the market here. So end of the month, yeah, the funds didn't have a big chance to get out with some of those limit down days. So got to suspect that that's some of it unwinding month end here for starters.
What about the cash side of this market? There's been so much talk about futures and the big drops there. Curious what you've been seeing on the cash front. I've noticed a few light bids out there on Friday's trade, but I mean, what do you make of the cash side versus the futures right now?
Cash held on very well, in my opinion. We were really all panicking and getting pretty scared, and we were able to get some of these northern trades. I mean, they started at 227 and it kind of quickly got to 230. You were able to get 230 for cash cattle in the north several days this week, even through yesterday, and from several packers and several majors. And then the south jumped up to 235. And so some of these northern guys that were holding out were asking 232. I haven't heard that it's been taken yet, but that was pretty impressive, from the live cattle side, 230 north, 235 south. But it's the cash feeders that take the cake. There was a break, a couple of days with the limit downs. There was some uncertainty and everybody calling, what do I bid? Everybody was sitting on their hands, which we have not seen during this entire rally. Because you couldn't lock anything in. We were limit down, unsure where we were going to do. But yesterday, it started climbing Wednesday, and on Thursday, it just rocket shipped out of here. Some of the feeder prices I'm hearing, trying to bid on some cattle and getting blown out of the water. So they came back in extreme fashion. And it could be part of it that it was saying, hey, Mexican border, there's no date set, for it to open. So maybe that was the signal that said, hey, we need to get some feeders bought. We know we're tight numbers. We're going to be tight through the end of this quarter, starting the next quarter. Nothing has changed there. So they came back in impressive fashion, and everybody's kind of scratching their head, wondering, okay, now what do I do? I can't even touch these feeders. So might have to wait into next week to see if that's going to still be the theme or not.
How does someone go about managing their risk here? And I know that's a loaded question. It's going to be different for everybody, but just thinking about all the volatility we've seen this week, and then, what you're seeing on the cash side and more, it's an important question, but it's also a tough question to ponder, I think, Scott.
It's a very important question, and how you handle it is really going to move your bottom line. I mean, guys that were able to hang on to hedges for this entire rally, they got a little bit of relief here. We got a lot of money back, hedge money going out this week. Um, Everybody's notes are tapped. You're going from, you're just keep raising that bank note every time we need some more margin money, and it's been grueling. So how do we handle this? Now it's broke real hard. You might have anything that you've bought on these calf side, they don't work here at these prices. So that's where we can get in a trap. Anybody can handle a winner. That's easy. Okay, well, I can sell it anytime. I'm a win. But handling a loser is what's going to make you the best trader, or make your operation better. So I'm looking at some of these puts, and yes, they are very high priced. But when you have break-evens that are well above us, okay, you can't hedge it. Maybe you just sit on your hands, but the risk is still there for further break. And I think you got to respect it. Those puts are high, but they should be. I mean, if we take an instance like this Mexican border, if we open it, we could head the feeders down to 275. If we don't open it, say it's going to close, we could head to 375. Yeah, those two numbers are a long ways apart. So when you're talking about the $7 to $10 for these puts, that's probably what they're going to cost. So trying to make sure I have the ability to get something on. I don't feel comfortable being wide open, and nobody should, with the limit moves either way as fast as it can move. So trying to handling it case by case. There are still some calls that are holding some big values, so there are still some things you can do to try to soften this blow here or get some kind of protection on.
Scott, on the hog side of the equation, looked like we had kind of an inside day on Friday. And this is maybe where I'll throw out the seasonality question just for meat demand in general. Thinking about the holiday season, beef demand, pork demand, chicken demand, you name it. I mean, I know that's a factor here as well. Your thoughts here with maybe seasonality, any thoughts in this hog complex here to finish out the month?
Yeah, absolutely. It's just been a market that's just on a slow grind lower. And yeah, when hogs trend, they trend. And when they find one, they grind into it. And I don't think you have to change. I don't think the trend has to change. You just wait until we break a trend line, and then you can kind of assess the situation there. But when I look at it from a fundamental standpoint, we had quite a few numbers coming at us. I mean, the numbers were getting cranked in. These barns got filled up in hog country pretty quick. And so I think that's part of the reason why we're breaking. Now, what's going to change this trend? I think we, week to the date, started seeing some PRRS show up, same time as it did last year. So that's starting to happen. We'll see if it's just our normal pattern of disease or if it gets any bigger. But there's a few things I like about the market that we could turn, based on that. Maybe it's some China deal, maybe getting some of this demand. But you mentioned the word seasonally. It's just the wrong time of year for hogs to really, turn it on, break a trend line, and put some big gains on. So we're too early for some of this bullish news. So I'm kind of feeling like, okay, I can put some of this news that I like in the back pocket, some short-term cash bursts here and there. But it's a market this time of year that's probably going to keep grinding a little bit lower till you get to something that says, hey, too low. Or we get to disease is really becoming a problem. And then we have to throw Canada in the picture. Okay, these tariff talks came to an end. Okay, we're not dealing with them right now. Well, we've got a lot of supply coming in from them. So does that upset the apple cart? And maybe alongside of PRRS, those two stories there could be something that could challenge it. But that's going to be more summer months, spring, summer. It's not going to really probably affect us here through December. So front months should stay down here with just ample supply.
And PRRS, that's a dirty word for hog producers, I feel like here. And it's something we've dealt with for years and years. And, I haven't touched base with any hog producer friends back home in north central Iowa. But, it's something I've heard time and time again that just continues to be an issue for, the remaining independent hog producers out there in many cases. And it does have impacts, to your point, on this hog complex at times.
Yeah, PRRS and PED, those two, yeah. The market loves to trade those. And I think last year it was just running rampant, I guess we could say. They had severe problems with PRRS last year that it really affected the supply. So just the fact that it enters back in the market, we have short memory, so we still remember that it was prevalent and it created some issues. So there's respect for it. Right now, we'll say we respect it. It's not something that's in the front gonna change the trend immediately, but definitely have to keep an eye on it if that's going to continue to rear its head here.
Scott Varlick with Quima Varlick at Sioux Center, Iowa, joining us here today on Market Talk. Let's go over to the grains and oilseeds here for a little bit, Scott. And, corn, beans, wheat, we ended up finding a little extra green into the close here on Friday. Kind of a quiet day overall, but obviously a lot of the U.S.-China news having an impact, especially in soybeans throughout the week. Pretty nice rally, maybe giving producers a bit of an opportunity here as we wrap up harvest.
Yes, don't let me forget to mention that. I think this is an opportunity. I mean, I think you're right there to say, hey, we have a good crop. Looking for those marketing opportunities. My answer is yes. That you can make some cash sales here and reward this rally a little bit. Now, looking ahead here, yes, China news that took the story of the week for sure. We got a government closed, so we don't have any reports to look at. So that's good news. That's some good demand news that you want to throw in front of the market. Beans reacted as they should. I mean, we saw quite a decrease in acres on soybeans, and corn really won over. The insurance really told us to plant corn last year, so that's what we did. So I think this is going to challenge our ending stocks numbers. I'm feeling okay about it. Now, we gapped higher, and you measure from that gap technically. And yes, the January beans stopped right where that gap told you it was probably going. That doesn't always work. It just happened to do it this time. So I'm looking at the beans and thinking, hey, I still think there's some life there, from a trader standpoint. They always make the saying, beans do not like to spend any time in the 11s. They're usually on their way to 12 or back down. So I'm trying to respect this. I think that the beans have some better life ahead. I think it's more of a buy breaks. It's hard to chase it now here on month end. It's you'd maybe anticipate a little bit of profit taking. Haven't seen it yet, but the funds are long the soybeans. I think they can push that higher. It's just the corn that's maybe a little bit more struggle. Maybe it raises the floor a little bit, but we've got a big supply here, and basis hasn't done us any favors either on these grains. So I think corn can try to maybe find a little bit higher of a sideway range. I mean, it was stuck at 420 D's corn for a month and a half, possibly. So maybe it's 430. So I don't have huge expectations corn, but beans, I kind of like what I see here.
Yeah, corn to me is, I've said this a few times the last several days, has felt like a reluctant follower to the soybean rally. We've been in such a sideways range in corn, and it's just kind of saying, okay, I'll go with you a little bit, but you're going to have to really drag me along here. But I think on top of that, to your point, an opportunity here. Producers, one of the big things I'm hearing really in the last 24, 48 hours or so is that all this news about China and other nations, it's good, but we got to also verify and make sure that this all happens. And so a lot of folks are saying, I'm a little more cautious and maybe want to, take advantage of this rally, to your point, because some of this stuff just isn't verified yet, and it may not be verified for quite some time, Scott.
Yeah, I think that they're right to be suspicious of actually seeing that this is going to happen. So I think that's an excellent point. And it's ever changing. I mean, we're seeing tweets and hearing what our politicians are saying every day now, and that highlights where the market wants to trade. So we're seeing some sales. I think that's good. I mean, this one feels a little bit more real than it has before, just the promises of it. Now we actually get to see some fruit from it. So I think that's a good thing. But I think from me, trading standpoint, as I look at this, I mean, last time Trump was in office, being short options, we had markets that were pretty flat and didn't have a lot of upside. So I always told myself, if he gets back in, that's how I'm going to trade it. So I'm trying to put my money where my mouth is on, especially that corn contract, and thinking that we're trading sideways. So that's how I'm looking at it. Being short options, yes, risk of loss from trading futures and options for sure. But that's how I kind of want to tackle it. I don't think that there's this big upside move. We would need to see, hey, really these numbers and trades are starting to happen, and that could happen in beans. That I don't want to trade beans the same way that I'm trading corn right now.
Scott, good perspective. Anything final you would mention or reiterate to folks here on the show today?
Well, I think we're keeping our Twitter feed on, I guess, to see what politicians are saying. And we've got Rollins talking to go down to Mexico here. So that was just after the Mexican prime minister was up here. So there's going to be some news that's going to change fast there. I mean, the words I said on cattle, there was no date set on the Mexican border. Well, what does that mean? I mean, does that mean it's just staying closed, or they're looking to set a date? So take it however you want to there. And all that political news is what's in the forefront. I mean, we're meeting with Brazil, we're meeting with Argentina, meeting with China, and Canada entering as well. So times should be a little bit volatile here. So playing it carefully.
Folks want to reach out and talk with you and the rest of the folks there at Coima Varlick. What's the best way to reach you, Scott?
Best thing is just to give us a call, 712-722-0023. We got 4 brokers. We'd love to visit with you.
I know folks can also find more at kkvtrading.com. Scott Varlick, Coima Varlick at Sioux Center, Iowa. Thanks for joining us on Market Talk. Have a great one, Scott. We'll talk to you again soon.
You too. Appreciate it, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.